Welcome to the Stocks on the Rock Show. Whether you like it neat, on the rocks, chilled, or warm, everybody's happier when there's money in their account and a drink in their glass. Let's get started.
Hey everybody, today's edition of Stocks on the Rocks, we're going to talk about Infuse Bourbon and Netflix. If you're new to the channel, do me a favor, click the subscribe button, hit that notification bell so you get the alerts and the updates as they happen. On this channel, we're going to take a look at some of the best things in life, right? I mean, we're going to talk about a good bourbon, we're going to talk about what might be a good stock, or maybe used to be a good stock, and we'll give some analysis of both. Hopefully you enjoy it. So, let's start with a bourbon, because if you're going to talk about stocks, you might as well have a drink in your hand. And we're going to talk, today is Infuse Spirits Bourbon. Now I will tell you, we just took a road trip recently to Colorado. Living in Texas, I'd never seen this, and I thought, wow, that is a beautiful bottle. It was. I mean, the bottle is really what struck me. And my favorite type of bourbon is typically the one I haven't tried yet. So I thought it was a good opportunity to try something brand new. The bottle really struck me, and this is it's a barrel strength, so it's 116 proof. And usually, you know, when you're going with 116 proof, something that's a little barrel strength, if they don't do it right, it can knock the socks off of you, right? I mean, you can really feel it. So a couple of things that I liked about this when I picked it up, it says distilled in charred oak from grain from Kentucky. So this is a bourbon that the Infuse company actually, they source the whiskey. So they source the whiskey, they source the bourbon, and then what they do is they finish it and with their infusions. They've got other brands, they've got vodkas, they've got a couple of other things, but I really was surprised how good this was, and it's infused with broken oak staves with French oak, Oloroso sherry, and ex-bourbon casks. So what I liked about it is you can kind of get a lot of that. So I will tell you, this got like an A+ for the cork. I mean, that's a good cork. So let's give it a little pour, give you a heads up on it, and tell you what your thoughts are. It's a nice color, right? I mean, you got a nice pretty deep color, lots of caramels. Oh, it's really, it smells good. It's what I like about it is you can smell it, and you smell fruity, like a little bit of fruit, not too much, but it's still 116 proof, so it's cask strength, so you're getting a fair amount of kick when you go in with it. So, ooh, it's really good. What it does is it in the beginning you get hit right away with like spice. Right, there's like a charred spice that immediately hits you from, I think that's from the oak barrels. But then as you have it a little bit, you get a lot more of that sherry flavor, and the sherry flavor comes in a little bit later. Pretty warm going down. You realize all of a sudden that this is 116 proof, and so it opens it up. I will say that I've done this on the rocks. I prefer it on the rocks because on the rocks it kind of opens up some of the flavors a little bit. So when I do this, typically I will do this one on the rocks. You can tell I've had this bottle a little bit less than a week, and there's a little bit less than half of the bottle left. Interestingly enough, this is batch number 001. This doesn't taste like a particularly old bourbon, so whatever one they sourced isn't a particularly old one. I think it's kind of younger, a little bit newer. But I think you get hit right away with the oak flavors, and then I think the sherry comes in. And now, as I've had it, it's still kind of in there. You've got a little bit of orange that feels like it's coming through, some orange and some of the vanilla notes. So a really good taste. I think it's a good one if you feel like, you know, sitting down and having a glass of bourbon. This is a good one will run really. It'll finish long. You'll have it for a while. It's got nice little legs on the side. I don't know how much that matters. I know that matters in wine. I don't consider myself a bourbon connoisseur, so leave me know in the comments section down below. When you are tasting bourbon, do you look and see what does it look like in the glass coming down? Are you looking for legs? Is that something that you pay attention to? So we're gonna continue to enjoy our Infuse bourbon. I would say that this is definitely one worth getting. I've had some that aren't worth getting, and we'll talk about those on the show too. But this is, I think, one worth getting if you happen to see it. I think it's a good one. I haven't heard as much good things about the 95 proof, but this one's the barrel strength 116 proof. I like a little bit more proof when I go through it. So we'll continue to sip on our bourbon a little bit while we talk about our stock of the day. So let's talk about our stock of the day. And we're going to start, our stock of the day is going to be Netflix. And when we talk about Netflix, we're going to start with the story, right? We go into what's today's story. So the story of Netflix, let's start and talk a little bit about what's their business model, right? And Netflix's business model, they've been around since about 1997. If anybody remembers, I was in college in 97. I had a full head of hair, was still young and handsome. But in 1997, Netflix essentially was a DVD rental company, right? I mean, essentially in 1997, you would order Netflix through the mail, right? You'd get your Netflix in the mail. I remember I had a subscription. I thought it was the coolest thing. And their biggest competition at the time was Blockbuster, right? Blockbuster Video was their biggest competition. Obviously, Blockbuster went completely by the wayside. But Netflix in 1999 decided to try this whole concept of a streaming service. And they put all of their programs in a streaming library. Now, interestingly enough, the DVD by mail service is not dead. And they've got way more titles available on their DVD service than they do on their streaming service, which is actually pretty ironic. But obviously, everybody if you're watching this on YouTube, you probably have Netflix. Most people that I speak to have Netflix in some way, shape, or form, and they've been on it for quite a while. But I think now it's time to really talk about the landscape that Netflix operates in, how it's changing, and what it means. Because I think that what it was 5 years ago is vastly different than what it is today. Oh, well, that's a good one. All right. So when you think about Netflix from a competition standpoint, when Netflix first came out on the market, it was Netflix or bust, right? And then certainly you have YouTube, and YouTube has content creators putting in new content all the time, like yours truly. Of course, you should subscribe to said content creator and share it and tell your friends about it. But anyway, Netflix is constantly looking for how do I innovate, how do I get new content. And when they first came on the market, the only people really to challenge them at all was YouTube. And as it's kind of grown, Hulu was probably the next big one that people kind of went over to and kind of got their feet wet with. But now, recently, and much more recently, is that Netflix is met with competition not only from traditional providers, ABC, CBS All Access, NBC Universal is coming out this year with their streaming service, but they're going up against what I call the three giants, right? The three giants are, in no particular order, Disney, Amazon, and Apple. And when you go up against Disney, Amazon, and Apple, that's like all of a sudden we're taking on the big bullies on the park, right? And so, for years and years and years, Apple and Amazon has had their Prime service for a number of years, and it's been a main competitor of Netflix and driven a lot of people to it. But I will say, and this is certainly not any consumer survey, but this is just me speaking normally, we have Amazon because we have Amazon Prime anyway, right? And I think a lot of people, they have Amazon Prime, they want to get the free shipping, and the video service comes with it. So a lot of people may have Amazon Prime and the Amazon video service, but they don't truly think of that as a Netflix competitor, right? When I'm thinking of my entertainment options, I never think about Amazon Prime as a competitor to Netflix, because I'm going to have Amazon Prime whether or not they have the video service. But Amazon Prime has recently, in the last 2 years or so, really stepped up their original content. And their original content is grossly pulling away from Netflix, right? There are more people that are watching some of the Amazon Prime original content than we're watching the Netflix original content. Now, speaking of Netflix's original content, they have a number of shows that people have really kind of jumped to and flocked towards. I mean, the most popular one right now is probably Stranger Things, of their own original content. But they've got other things, right? Orange is the New Black was a very big deal. They certainly have things like, what's the word I can't think of. Oh, they had a lot of the Disney Marvel shows, right? Luke Cage and Jessica Jones and Daredevil. Now, but all of a sudden, when Disney said we're going to come out with our own streaming service, Netflix lost the ability to make that particular original content, which was some of its highest rating original content. And so now Netflix essentially is, for most of its career, Netflix has been a content aggregator. Now they're a content producer. Well, earlier this year, Apple announced that they're coming out with content production, and it looks like a fairly high-level content production that Apple's coming out with. I know they're flooding the internet right now with, I think it's the new show with, I think, Jennifer Aniston and Steve Carell. I mean, those are two very big names that they're trying to make sure that they can pull people into their original content. Disney is going to create their own original content, which is going to fit into the Marvel Cinematic Universe. And Amazon continues to create original content. And here's the thing to think about. Netflix has gone from a content aggregator and a delivery vehicle. Now they're a content creator, because they're having a hard time, keeping up with the Joneses, if you will, right? I think the most watched show on Netflix right now is The Office. Well, The Office is going to come off. The second most watched show, I think, is Friends. It's also coming off. Most of their most watched programming is going to come off of the Netflix platform. And now Netflix is going to battle with the three big boys, right? So when you look at the three big boys, just look at them from size-wise. So Disney has a market cap of $247 billion. Amazon is $878 billion. And Apple is about $943 billion. Now those are big companies, some of them the biggest in the world. Netflix, while it's a big company, is at $128 billion. So Netflix is less than half the size of the smallest three that we just talked about, right? They're 1/5 the size of Amazon and Apple. And so the competition is going to be much bigger, much harder than it ever was. And what does that mean for the fundamentals of the stock? Right, so talking about the fundamentals of the stock, I got a graphic here that you can see, and looking at this graphic, what it talks about is the projected subscribers versus the actual subscribers. In the most recent earnings report, they announced that they had 5 million projected new subscribers coming in, but they only got 2.7 million. Now, their revenues still hit, but their revenues hit because they had a price increase. Now, also Netflix had not only that price increase, but they saw that those new subscribers, most of them where they dropped off was where that price increase occurred. So has Netflix reached the consumer tipping point, right? Is $12.99 a month that consumer tipping point where consumers are saying, I don't really watch most of what's on here anyway, and are they going to start switching their services and what it is that they're doing? Looking at Netflix as far as their free cash flows, right? How much cash flow do they have that's free in what it is that they do? Well, taking a look at the most recent quarter, first quarter of this year, they actually did a bit better. But the second quarter of this year, their cash flows were negative $591 million. So what does this mean? Well, this means that in order for them to be able to generate additional operating capital, they may have to raise debt. They may have to do stock. They've got to have a way to continue to generate that additional capital. So from a fundamental standpoint, you're seeing the content side is having some weakenings. So too are the fundamentals. But let's look at the technicals, right? Because the technicals tell us another story. Looking at the technicals, this is a 10-year weekly chart of Netflix. Now, what you can see in this 10-year weekly chart, kind of zoom in here to the very end of this 10-year weekly chart, you can see that we have 2 consecutive lower swing highs. And this is the first time that we've had lower swing highs in Netflix on a weekly chart in about the history of the company. So you can see that this area highlighted in yellow, this would be considered a demand area, right? And a demand area is where demand has exceeded supply. And we would anticipate that this is where institutional buyers maybe came in. Now, if you notice, the last time we came into this demand area, price rallied up, but it was unable to create a new high. So that actually is a fairly weak sign. That tells us that there's weakness in the stock because on the return to the area of demand, we were unable to create a new high. So the question now becomes, are hedge fund investors and institutional investors still buying down at these prices? And really, ultimately, what we start to look for is where's our next area where they may step in and buy, right? And looking at the chart, we see that there's a little bit of an area a bit below that yellow bar. So that area is right around $200 a share. And at about $200 a share, I think could be kind of that fair price value area where you see a bit of a bounce. So if you're an investor and you're looking for, where should I get back into Netflix, there could be a chance to get back in at this area. Of course, certainly you'd be already in a strong downward trend, so it may not make sense. Going to a little bit of a smaller time frame, here's a picture of a daily chart. Now, looking here at this daily chart, what you can see is that we have a little bit of a support area here down below. Now, this support area, we've kind of bounced off of it a few times, and if we indeed can break below that support area, you don't have a tremendous amount of demand, if you will, to stop it until price goes a little further. Now, from another technical perspective, what we also have is we've got what's also oftentimes called the death cross, right? The 50 period moving average has crossed below the 200 period moving average. Now, why is that important? That's important because a number of maybe quant investors, people that are utilizing computerized trading, they may have automatic sell signals built in when price gets down to there. So combine a fairly decent support level with a 50 and 200 period moving average, it might make sense to look at saying, I don't think Netflix is a good bullish opportunity. And if I'm already long that position, it might make sense to look to scale out of that position. If I want to get short, it could be an opportunity to look at puts. You could look at puts in this area. You could certainly also look at shorting the stock. Certainly your risk profile and your risk parameters are going to be a very important part of that. As an options trader, it gives you a lot more things that you can do with the stock rather than just shorting the position. And then also maybe taking a little bit of a benefit from the downside. So that's my thoughts on Netflix. Overall, I am a little bit more bearish than I am bullish on Netflix. I think that the competition coming into the industry, I think that the fundamentals aren't very strong, and I think that the technicals already in a weekly downtrend are telling us that the better opportunity is to look to the downside. So if you're not a subscriber, please make sure you hit the subscribe button, the notification bell, share this channel with your friends, and until next week, drink well, trade well. See you soon.